Today is Monday, May 8th, and this is the ADM Investor Services Weekly Market Kickoff. Today's guests are Alan Bush, Senior Financial Economist here at ADMIS, and Steve Freed, Vice President of Grain Research. Alan, hiring rebounded in April. Non-farm payrolls increased to 211,000, which compares to expectations of up 190,000, and the unemployment rate fell to 4.4% when 4.6% was anticipated. The U.S. dollar initially advanced on the better-than-expected headline U.S. non-farm payroll report, but gave back all of the gains and closed lower on Friday. What is the outlook for the U.S. dollar now?
Well, it looks like the dollar is likely to have some trouble over the near term. And I think the reason is that even though the Fed is likely to raise rates one, possibly two more times this year, other central banks who are accommodative are likely to become less accommodative. That would include the European Central Bank, and even the Bank of England may be raising interest rates next year. So the interest rate differential advantage that the dollar has enjoyed so much, especially last year, is no longer there. So we feel that even though some of the economic numbers have come in better than expected, it's the interest rate differentials that are not quite as supportive. So I would expect the dollar to continue to work sideways to lower.
Last Wednesday, the Federal Open Market Committee voted 9-0 to hold short-term interest rates steady at 75 to 100 basis points, as widely expected. What is the outlook for the Fed policy now?
I'm not quite as hawkish as a lot of people are. Some banks are even saying that there could be 3 more rate increases this year. I'm thinking just maybe 1 to 2. The Fed says maybe 2 more. So I'm not really in that camp. Right now it looks like there's an 83% chance that the Fed will raise rates at their June meeting, maybe 1 more in December. So just look for 1 more. If I had to guess, I would say just 1 more this year.
And what is the outlook for stock index futures?
Nothing has changed there. Interest rates are still low enough to sustain the bull market. And in fact, we did see some new historical highs in the S&P overnight and also in the NASDAQ. So our feeling is every break should be used as a buying opportunity. And we are looking for higher prices, and I think these gains that we are anticipating should last through the balance of this year at least.
Steve, what is the U.S. and global weather outlook?
Well, we're in a weather market, and right now it looks like the U.S. is going to be drying out, which today is negative prices. No one's really talking about any bad summer weather for the U.S. The only issues that we might be having right now is Brazil has turned drier, which could impact the finish of their second corn crop, and Argentina is wet, which could slow down their harvest. Long term, the only problem area that the market, at least weather meteorologists, are looking at is possibly some dryness this summer in Russia.
What is the price action in corn, bean, and wheat futures?
Today we're lower. We've got a lot of overhead resistance. Mostly because we have just too much supply. And even though we have record demand, carryouts are going up, which tends to be bearish to prices. We've gotten through the South American harvest for the most part without any problem. We're looking ahead at the spring weather. There's no problem here in the United States or Northern Hemisphere. So we've been in a sideways trading range for much of the last 2 to 3 months. Now it looks like we're going to put a little pressure on prices.
What is the USDA expected to say in the May 10th supply and demand report?
They're not expected to make a lot of changes on the 16 and 17 U.S. corn, soybean, and wheat carryouts, nor are they making a lot of changes to the world 16 and 17 carryouts. They could raise slightly the bean carryout and lower slightly the corn and wheat carryout, but not a big difference. But this is the first time in which they annually put together supply and demands for next year, 17 and 18. They could show a very large soybean U.S. carryout, and they could show corn and wheat carryouts just a little bit below this year. Globally, they could lower the corn carryout for 17-18, but keep wheat and soybean carryouts near their record high levels. So in general, this report could be a little negative.
And finally, what is the first official estimate of the U.S. 2017 winter wheat crop?
Well, right now we've got less acres and maybe a trend yield. So the production should be around 1.3 billion bushels of wheat. Last year we had 1.672. So with the larger carry-in, that lower crop number may not be a bullish factor as one might think when it comes out with that number. So it'll be lower than last year, but it may not be bullish.
Please remember that the opinions expressed here today are solely the opinions of our guests and are not necessarily the opinions of ADM Investor Services or Archer Daniels Midland Company. If you have any questions or comments or would like to know more about our services, please contact us at www.admis.com.